So now we can discuss about the types of dividend policies and the different types of dividends. So these are the main dividend policies. They are stable dividend policies, regular stock dividend, irregular dividend, etc. So the stable dividend policies, they are again divided into constant dividend per share, constant percentage of earning, constant dividend per share plus extra dividend. As the name suggests, these dividend policies are theoretically very easy to understand. So first of all, we can see the stable dividend policies. The stable dividend policy means there is a consistency in the dividend payment, because the stable dividend policy is one that maintains a regularity in paying some dividend even though the earnings fluctuate from year to year. So even though there is a fluctuation in the earnings, a stable dividend will always be paid to the shareholders. That's for sure. Whatever happens to the earnings, a stable dividend should be paid to the shareholders for sure. So there are three types of stable dividend policies, that is constant dividend per share, constant percentage of earnings, constant dividend per share plus extra dividend. So the first one, the constant dividend per share. It means this is a policy of paying a fixed amount of dividend per share every year, irrespective of the fluctuations in the earnings. A fixed amount per share is fixed as dividend every year. So that should be paid to the shareholders for sure when the company earns profit. Whatever fluctuations happen to the earnings of the firm, a fixed amount per share is assured to the shareholders as dividend in this type of stable dividend policy. The next one is constant percentage of earnings. And this means a fixed percentage of the net profit is paid as dividend every year. And this is also a stable dividend policy. The shareholders is assured definitely, the shareholders is assured dividend definitely, because in this kind of dividend policy, a particular percentage of the net profit is assured to the shareholders even though whatever happens to the earnings. So a fixed percentage of net profit is paid as dividend every year. And the last type of stable dividend policy is constant dividend per share plus extra dividend. This is a mix of the first stable dividend policy. That means a constant dividend per share is definitely distributed to the shareholders. Along with that, if the company is making an extra amount of profit, then definitely extra dividend is paid along with that assured dividend per share. So whatever fluctuations happens, the company will assure a fixed amount per share as dividend to the shareholders. If the company is making an enormous profit, then definitely an extra dividend is paid along with that. So that's all about the stable dividend policy. Now we can move on to the regular stock dividend. This regular stock dividend means this is a policy of distributing shares in addition to the cash dividend to the existing shareholders. Regular stock dividend means normally the dividend is paid in the form of cash. So this kind of dividend policy says that in addition to the cash dividend paid, the shares or bonus shares, the stock is paid as dividend to the shareholders. This is the regular stock dividend. And the last one is irregular dividend. This policy is adopted by companies having highly unstable earnings because their future is uncertain and they have not having a stable income. So always their dividend policy is irregular. Under this policy, higher rates of dividend shall be paid in the years of higher profit and lower rates of dividend are paid at the years of lesser profit. So there is no regularity in the payment of dividend. So these are the major kinds of dividend policies adopted by the firms. Now we can see a term that is optimal dividend policy. What do you mean by optimal dividend policy? Pay dividend or not paying dividend, or up to how much portion to be paid as dividend, is completely the choice of the management. Either the management can pay dividend, or it cannot pay, it should not pay dividend, or it can retain the money, or some portion of the earnings can be paid as dividend and some portion can be retained. It is completely the choice of management. So some says that there is no optimal dividend policy. That means the dividend payout does not affect the value of the firm. But some says that there is an optimal dividend policy because dividend payout definitely affects the value of the firm. So considering the second part, that there is an optimal dividend policy because the dividend payout affects the value of the firm. That means the dividend policy is relevant. Considering that part, we can say that there is an optimal dividend policy, and optimal dividend policy is a policy in which a company has to dividend a particular dividend payout that gives maximum value to the firm, and that particular dividend payout is known as optimal dividend payout, or that kind of policy that will gives you maximum value to the firm is known as optimal dividend policy. Now we can move on to the different types of dividend. There are cash dividends, stock dividend, scrip dividend, bond dividend, property dividend. The first and important one is cash dividend. In cash dividend, normally the dividend that should be distributed to shareholders are distributed in the form of cash, and it can be paid in two ways. There are regular or final dividend and interim dividend. The cash dividend can be paid to the shareholders at the end of the financial year at the board meeting, or it can be paid in between the financial year by having an interim meeting also. So if the cash dividend is paid only at the end of the financial year, then it is a regular or final dividend. If the cash dividend is paid in between the financial year by commencing an interim meeting, then that is known as interim dividend. Next one is stock dividend. If the company is not having sufficient fund in their hand to pay out the dividend, then the company can pay the dividend in the forms of shares by issuing bonus shares to the shareholders. So paying the dividend in the form of shares is known as stock dividend. Next one is scrip dividend. Scrip dividend means if the company is having company is lacking fund, so they don't have the money, they don't have the fund to give the dividend in cash. At that time, they will can give a temporary promissory note or scrip to the shareholders, stipulating that the amount will be paid after a particular period. And that kind of dividend, that kind of transferable promissory note is known as scrip dividend. In that particular promissory note, the amount that should be paid after a particular period will be correctly specified. So this is known as scrip dividend. And the next one is bond dividend. In this company which is not having sufficient money to pay the dividend as cash, they will pay out the dividend in the form of bond. And the last one is property dividend. The company which is lacking money, lacking fund to pay in the form of cash, they will pay out the dividend to the shareholders in the form of some properties. So these are the different types of dividend.